This is Matt Simpson from Forex.com, and today I'm going to take a look at the potential for some of the Aussie pairs to retrace against their very bullish moves. But first, a quick recap. It was a shorter trading week due to Australia Day on Monday, not the volatility cared. The US dollar continued to plunge at the start of the week, sending the Aussie above 70 cents, and that stole a lot of the thunder from Wednesday's Q4 CPI report. While inflationary pressures are clearly building, the data didn't deliver the assurances traders wanted to confirm an RBA hike in February. The 3-year bond yield fell 11 basis points after the release, but with trimmed mean CPI above the RBA's target band, it certainly keeps the pressure on them. So I expect a very hawkish tone from the RBA at next week's meeting, but for them to hold the cash rate at 3.6%. We also saw explosive volatility on base metals, with gold soaring above 5,600, silver trading above 120 and copper spiking above 6,500. But with whipsaws at the highs on Thursday, the Australian dollar has been caught in the crossfire of metals and the US dollar. So I think we're approaching a stage where the probability of at least a bit of a pullback or a pause in trend for the Aussie is close, but further out I still remain bullish on the Australian dollar overall. We can see that momentum has exploded higher on the Aussie, which is on track for its best 2-week rally since the beginning of the trend in April. It reached my bullish targets far sooner than I imagined, which could in itself be a clue the rally has overextended. The daily chart shows a spinning top doji, and already it is probing for a break beneath 70 cents. But if we look at options data, risk reversals are pointing lower, which means puts are rising relative to calls, hinting at a potential pullback on AUD. Now, AUDCAD is probably one with more potential for bears over the near term. A wide-legged doji formed on Thursday, meaning it was a volatile day of indecision with a hue of bearishness. It also occurred at the 2023 high, which adds weight to the resistance level, and notice the day closed back beneath that key level. It's also on track to form a shooting star reversal candle on the weekly chart, so to see such volatile reversal patterns around that key level suggests the cross is not ready for a bullish breakout just yet. Oil prices are rallying, which is supportive to the Canadian dollar, and that could see Aussie CAD retrace against this larger bullish move, which brings the September 2024 high into focus for bears, a break beneath which could see 93 or even the highs around 92 on the cards. Now, the rally on Aussie yen has been very strong, rising 26% from April's low. Unless the MOF do actually intervene in the currency to strengthen the yen, its trend seems more likely to continue than roll over. So that could see Aussie yen above 110 in the coming weeks. But we can't ignore the fact that the 2024 high looms nearby, and we're yet to see a retracement on this trend. Now, this is not a market that has favoured bears much at all, but when you see several currencies approaching resistance levels like Aussie dollar and Aussie CAD, now Aussie yen, it can point toward a potential inflection point for that single currency in general. So while Aussie yen is not a preferred short setup, it adds to the case of retracements on other pairs such as Aussie dollar or Aussie CAD. Perhaps it just needs a catalyst such as an RBA meeting. So, as mentioned, I do think the RBA will probably hold at 3.6%, but they are likely to be forced to give a hawkish tone due to the strong economic data that has been coming in. Even if they do hike, they're not going to be in a position to hike soon afterwards as well. Regardless, I don't actually think that the RBA meeting is going to be such a huge event now, given what we're seeing, the explosive moves elsewhere. So beyond the RBA meeting next week, the Oz is more likely to take the direction from metals and the US dollar. As always, hope that's useful. Wish you best of luck with your trading.